Hello, everybody, and welcome to the Dorsey Wright Market Update for November 2nd, 2020. I'm Jay Gragnani, and here joining me this week is Ian Saunders. And here we are on the eve of the U.S. presidential election, which is slated to take place tomorrow, November 3rd. Obviously, a lot of publicity around the election. A lot of angst amongst many investors out there, and we've seen some volatility leading up into the election this year as we turn the calendar on the month of October. Last week in the market, the S&P 500 was off about a little over 5.5%, and that was the worst week that we've seen in the market, really going back to March of this year. And so what we wanted to do today is run through a number of different items, specifically as it relates to some perspective in terms of support levels on the S&P 500, as well as some notable names, especially some of the big cap tech names that are very heavy weights inside of a number of the indexes, and also coming off of a week of a number of those names having reported earnings. But just initially looking at the S&P 500 here, the S&P 500 over the course of the past week, as we mentioned, certainly pulled back, and so far has pulled back into some support in the 3220 to 3240 area. With today's action, the market obviously up notably today, Monday, as we're recording this. It is the Dow specifically is up about 400 points. The S&P 500 up a little over 1% as well. And the result of that has seen the chart now for the S&P 500, at least on the 20-point chart specifically, is what we're looking at here, has reversed back into a column of those. Reversed back into a column of X's, reversed back up after holding that support level in the 3220 to 3240 area. So that will be, as we continue to move forward here, that will continue to be an important area of at least near-term support. Below that, you've got some more support in the 3120 to 3140 area, and then the trend line down in the 3000 area. So those are just some areas as we continue to move forward here. Into the election, into the rest of November, those will continue to be areas of support that we will want to watch. And I think it's also, Ian, worth mentioning, when we look at the S&P 500 specifically and just the general market, what you saw specifically on the S&P 500 is you saw the index and a number of stocks over the course of the previous month move into mildly overbought territory with respect to its weekly distribution. And what we saw here over the course of the past couple of weeks is a lot of stocks, a lot of indexes had kind of reverted back towards what would be more normal and ultimately more oversold as it relates to the S&P through Friday's close was at minus 41%. So it was about 41% oversold on its weekly distribution reading, which is as oversold as the market has been going back to the beginning of April. And so that's, just what we saw certainly move from being overbought where we were at the end of August, over 100% overbought, back towards oversold at minus 40% on that weekly distribution. And so now today you're seeing that get to a more normalized level with Monday's action. So, as we move forward, that will certainly be something important to continue to watch, are those weekly distribution readings, as well as some of those support levels. And underneath the surface, Ian, obviously we're looking at the S&P 500 here, but there's a handful of names that reported earnings last week that have done very well this year, have been dominant in terms of the market performance and really leading the S&P 500 as we look at some of those big tech names.
Absolutely there, Jay. And so in looking, like you said, at some of those names that reported earnings late last week in that technology space, and there's been some of those areas that have continued to lead the market higher for most of the past several weeks and several months. It saw some interesting movement from those following their earnings reports late last week. As of market close there on Thursday, we had Apple, Facebook, Amazon, and Google all report earnings after the market closed there on Thursday. And it had differing results from stock to stock, but showed some similar movement for at least 3 out of the 4 of those names as a result of those earnings there with movement there on Friday. So taking a look first at Apple, we had seen Apple move to new all-time highs there in September, as the broader market did. And then in a similar picture to the broader market, decline, give a couple consecutive sell signals, moving back towards into oversold conditions before rebounding a bit there in October. Movement there over the course of the last week led Apple to reverse back down into a column of those. And with movement on Friday, the stock was down a few percent, but only ultimately led to one additional O printed there on that chart as of market movement there on Friday. So currently sitting in a column of O's, but still on a buy signal, sitting at that in a column of O's there at 110. That's near-term support offered on Apple at 106 and 104. So similar picture kind of to the broader market there. You have in a column of those slightly oversold, but with some near-term support that's offered there from those September lows. Facebook, a little bit different picture, but still saw some negative movement as a result after their earnings release there. So on Friday, the movement led to a reversal down into a column of O's from 280 down to 264. But again, we can see a similar picture now, slightly oversold, multiple support levels offered close by at 260, 256, and then down at 248. But it's also important to keep in mind that both of these names are still trading an overall positive trend, significantly above their longer-term bullish support line. So still technically sound names, each of these being a 4 for 5 from an attribute perspective, currently in O's, but still on buy signals and still in overall positive trends. So those support levels will definitely be a place to keep an eye out for as we move through what at least certainly has the potential to be a volatile couple of days here. In looking at 2 of the other names that we have, Amazon and Google, Amazon saw some of the most negative movement out of any of these 4 names. Reversal down into a column of O's. It had already given a sell signal earlier in October at 31.36. And the reversal down yesterday led to a second consecutive sell signal being printed there at 31.04, and the stock fell down to 30.40 as of market close there on Friday. Market movement this morning, Amazon was down a little over 1%, led to an additional O that's going to be printed on that chart down at 30.08 as of the intraday movement, at least at the time of this recording on Monday. But still, even though we have moved into 2 consecutive sell signals from this name, still in an overall positive trend, still a technically sound 4 for 5, and also has near-term support offered there at 29.76 with that bullish support line coming in at 29.44 directly beneath that. So definitely will be an area to keep an eye out there for with those support levels close by. But in similar kind of picture, at least with those first 3 names with the negative movement that we saw there, the chart, most of the charts remaining unchanged with intraday movement here on Monday, Amazon printing that additional O there. Google, a little bit different story, seeing that post-earnings movement lead to an actual return to a buy signal for the Alphabet Class A chart there, GOOGL. So double top breakout there at 1664 returns the chart to a buy signal, and currently sitting still at those levels as of intraday movement on Monday. So Google had the most kind of positive movement out of any of these 4 names. So back to a buy signal for Google there. Sitting has that near-term support offered at 1520. Again, all of these names being technically sound 4 for 5ers, trading in overall longer-term positive trends above their respective support lines. So we'll definitely be some areas to monitor as we move through the rest of the movement with all the upcoming election movement throughout the course of the rest of this week. But most of these pictures, kind of regardless of, I mean, you see here, Jay, we've seen a fair amount of kind of sideways movement over the course of the past few months. Even though Google is the only one to move to the upside here, really since July, most of them have been moving largely sideways and similar to the broader market. For at least the first 3 names, trading in slightly oversold territory, but overall still longer-term positive trends, and that longer-term technical picture has remained intact throughout what has, at least historically, as we move into the month of November, wrap up October here, Jay, what has historically been that seasonally weak period of the market didn't bode all that seasonally weak for at least some of these big tech names here.
Yeah, that's right. I mean, and you look at those 4 names alone, And those four names account for about 17% of the movement for the S&P 500. So those are, certainly very important names, big names as it relates specifically to your market cap weighted benchmarks and indexes. Obviously, the S&P 500 being one of those, and it has been an interesting story this year, really, where the big cap stuff has dominated, even to the extent of, if you just look at like the S&P 500 through Friday. So with October's market pullback, the S&P 500 is up just over 1%, 1.2% for the year now, versus the S&P 500 equal weighted index. So if you take all the same 500 stocks, and instead of cap weighting them, so instead of giving more weight to the biggest companies, you equal weight all 500 of the companies that are in there. So every single company has the same weight. The S&P 500 equal weighted index is still down 7% on the year. So you've got 8+% spread between the cap weighted index and the equal weighted index. And a big part of that is just the strength that you've seen amongst a lot of those technology names. So we'll continue to monitor those to see if those are the areas that are continuing to hold strength. Right now, there's nothing to suggest, as you mentioned, that the large cap tech stuff and large cap growth is rotating out of favor. I mean, they're still technically sound. They're still strong attribute names, still in positive trend, but certainly a picture that is worth monitoring. As we move forward, and as you mentioned and alluded to, as we move forward through the month of November, and in addition to U.S. presidential elections coming up this week, every year we turn the calendar to November, and that begins what is historically known as the seasonally strong period in the market. The seasonally strong period being from the beginning of November through the end of April. And then when you get into May 1st brings the adage of sell in May and go away. And that just speaks towards the seasonality impacts that the market has historically seen over the years, where the period from the beginning of May through the end of October is what is known as the seasonally weak period in the market. Now, this past seasonally weak period, the Dow Jones was up over 8%, almost 9%. And it was, the best since 2017, when the Dow was up about 11.6%. But historically, if you go back to 1950 and you look at all of the numbers, and if you break down the market between just being invested in the seasonally weak period versus being invested in the seasonally strong period, just the difference between that, if you were only to invest in the seasonally weak period during going back to 1950, you have an average annualized compounded return of just 0.35% going back to 1950, versus just being invested in the seasonally strong period. Your seasonally strong period return is 6.75%. It's almost what you have earned in just buying and holding, which is about 7%. And so, that is just, speaks more towards the bias of the market that we've seen, that has historically seen a strong period from starting November through the end of April. And that is, what we've just historically seen in the market. So, as we turn the calendar, if you look at the chart there, and you can almost look at it, if you were to invest $10,000, let's say back in 1950, and just own the seasonally strong period of the market. So during November through April, you were invested in the Dow Jones. During the seasonally weak period, you were just sitting in cash and earning T-bill rate. That's that red line there on the chart, taking $10,000 up to close to $1 million, which again is very similar to just the buying and holding, but you're only invested for half of the time during the year, versus the seasonally weak period. Your $10,000 is still about $10,000. There hasn't been a whole lot of growth and participation that we've seen. And so, a number of the strategies, obviously, we're not likely to just simply go out and sell everything in May and come back at the beginning of November and get fully reinvested again. But some of the seasonal biases that we've seen as a result of that is, one, during the seasonally weak period, some investment factors and investment strategies have historically done better, and the market has rewarded things like low volatility investment strategies during the seasonally weak period versus a seasonally strong period where the market has tended to reward more growth-oriented investment strategies. So, growth or even momentum type of strategies. And so, there's a number of models that we publish on our website that are designed for you to follow in a very simple manner of just, if we look at momentum and low volatility, so we could look at something like PDP for momentum, which is the Invesco DWA Momentum ETF, and we could look at something like SPLV or DVOL for a low volatility strategy. And very simply, what you can do is during the seasonally weak period, you overweight low volatility and underweight momentum. And then as you turn the calendar to November, now we want to overweight momentum and underweight low vol. So some of those strategies basically adjusted as of Friday of going 70% in low volatility to now 70% in momentum and 30% in low volatility. So that's just, one idea, one way that you may choose to take advantage of just the historical bias that the market has seen in this November time period. And maybe you want to implement that now. Maybe you want to wait for the election results to come out and let some of the dust or uncertainty settle from that. So, that'll certainly be something that all eyes will be on, whether we know with any degree of certainty tomorrow or not. There's certainly speculation around. It might take some time, and we might not actually know who the results from the U.S. presidential election tomorrow. But certainly something that we'll continue to monitor, and certainly something we'll continue to see and monitor through these videos, through our equity reports. As the market reacts to whatever the news ends up being coming out either from the election or whatever else it might be, we'll continue to monitor those situations for you, continue to update you on charts and key support levels on the S&P 500 as well as individual stocks that we're monitoring. But in the meantime, if you have any questions, comments, concerns, anything that we can help you and your business with, please don't hesitate to reach out to us. Our phone number, email address is on the screen right there. And with that said, as always, we appreciate you taking time out of your day to join us for these market updates. And Ian, appreciate you joining us. Thank you all for being on, and look forward to talking to you next week.